Today I'm going to talk about the child tax credit. First, I'm going to go through some of the rules. Then I'm going to jump into two calculators that's actually going to help you figure out whether or not you qualify for the child tax credit or another dependent credit. And I'm also going to show you a strategy to help you reduce your taxes using these credits. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. All right, let's jump right into the child tax credit. The credit is $2,000 per child. So if you have two children, that's $4,000, $3,000, $6,000, and so on. And it's a refundable credit now, where in the past it wasn't. So it's a refundable credit up to $1,400. So what does that mean? If you have a tax liability of $0 and you have a qualifying child, then guess what? You're going to get a refund still of $1,400. Even if you have zero tax liability, you could still qualify up to $1,400 in a refund. And that is also per child. So if you have 2, 3, 4, 5 children, multiply it by $1,400, and that's going to be your refund. Your child has to be under the age of 17. So if they're 17 on December 31st of 2018, they do not qualify. They have to be under the age of 17. So actually 16, not 17. Now, if your child is over the age of 16, so they're 17 or older, then you might be able to qualify for the family credit or the other dependent credit, which is $500. And that is not a refundable credit. Only the child tax credit is refundable. So there's a little bit of a difference right there. So as soon as your child is 17 or older in the tax year, then they no longer qualify for the child tax credit and it reverts to the $500 non-refundable credit. As far as the income limits goes, there's both a minimum and a maximum that you can earn as far as your income to qualify for this child tax credit. It's significant. So on the low side, on the low income side, you have to have income of at least $2,500. Previously, it was $3,000. Now it's just $2,500, and that's earned income. So earned income is the income that's coming in through the door in addition to non-taxable combat pay. So it's earned income of $2,500. On the income limit side, it's $200,000 for single or head of household and $400,000 for married filing jointly. And that's just the beginning of the phase out. It reduces, the credit gets reduced by $50 per $1,000 over either of those two thresholds. So the math on the child tax credit, let's say that you earn $220,000 and you are single and you have one child. So what that means is $1,000 per $50. So if you have $20,000, that's 20 thousands. So 20 times $50 is $1,000. So the maximum credit is $2,000. So 2,000 minus 1,000 is $1,000. So you still can qualify if you make over that amount. It just gets phased out from $200,000 to $240,000. And the same thing is from $400,000 to $440,000. That's the complete phase out. Now, if you want to see the complete list of rules, it's publication 972 for the child tax credit. And there are, for the qualifying child, there are some rules that you want to go over. So I'll point them out right now. So the first one is your child is your son, daughter, stepchild, eligible foster child, brother, sister, stepchild, stepsister, half brother, half sister, or a descendant of any of them. So for example, your grandchild, niece, or nephew. So that is the first thing that you have to look at for the child tax credit. Number two, as I already pointed this out, that they have to be under the age of 17. And then the child did not provide over half of his or her own support for 2018. So basically you have to provide the support for them. So if they're earning an income from, say, whatever, you have to make sure that you're at least 50%. Number four is the child has to live with you more than half of the year for 2018. Now, because the rules say that they have to be under the age of 17, they're likely not in college, but if they're in a boarding school or for some other reason that they're not in your household, they can still qualify. And the calculator or the walkthrough that I'm going to go through will help understand that just a little bit further, but that is one of the rules. So they don't technically need to be in the house physically. They can be absent, but you just need to make sure that you look at some of those rules a little bit closer. And that is rule number 4. Number 5 is they have to be a dependent on your tax return. If you're wondering if they qualify as a dependent, that's what the calculator that we're going to go through in just a minute. Number 6 is the child does not file a joint return for 2018. And number 7 is the child was a US citizen. They have to have a social security number in order to qualify for the child tax credit. So that is a big one. If they don't have a social security number, you go get your child a social security number. You have to do it before you file. That is a requirement, or you don't qualify for the child tax credit. So I will put the link down in the description at the bottom for the child tax credit for 2018, that publication I just read through, publication 972. So I'm gonna make sure I put that in the description at the bottom. And now let's go through some of the walkthroughs. So here is the walkthrough for, does my child dependent qualify for the child tax credit or the credit for other dependents? So this is a really simple walkthrough, and I'm going to go through it. So click right here and click begin, and I'm going to put this link in the description at the bottom as well. So does my child, let's continue. Tax year, we're going to select 2018, click continue, and then go ahead and fill out your filing status. So we're going to file married in this example. And do you and your spouse intend to file a joint return for 2018? Yes. Click continue. And then click on add and then put your son or daughter's name. I'll just put son and click continue. You can put their name. It doesn't matter what you put in there. It's just referencing your son or daughter by name. And do you have a valid social security number? Yes. Did your spouse have a valid social security number? Yes. Did you or your spouse have the child tax credit disallowed or reduced in the past for reasons other than a math or clerical error? Let's click off no, click continue. So basically they're wondering if you did something against the IRS regulations where they banned you from taking this credit moving forward. So let's go ahead on this page and select biological child. And then you can pick their birth date. I'll just go ahead and put January 2017, put that in there, click continue. This is the question that's asking about the social security number. So does your son have a social security number valid for employment that was issued before the due date of your return? Let's click off yes and click continue. Are you claiming your son as a dependent? Yes, we are claiming them as a dependent. So we're going to click continue. Are they a US citizen? Click yes. We went over that in the rules. And this is what I was referring to as a temporary absence. So if they had an illness or if they're in the hospital or something like that, education, away at school, business, vacation, military service, then let's click on yes, click continue. And there you have it. There's your answer. It says son is a qualifying person for child tax credit purposes. So this calculator or this walkthrough verified whether or not your son or daughter or whoever your dependent is qualifies for that child tax credit. Now that other question that we want to figure out is whether or not they're an actual dependent. So that walkthrough is on this page. Whom may I claim as a dependent? Let's click begin, click continue. What's your tax year? 2018, click continue. Marital status, I'm going to be married filing jointly, so married. Did you or your spouse provide more than half of the support for 2018? You wondering what support is? Click on the link. It goes through a list of what support qualifies. Go back, click yes. We did support them. Did you and your spouse intend to file a joint return? Click on yes, click continue. Did you or your spouse provide more than half of your spouse's support for 2018? Yes, click continue. And then we have to add the person. So we'll just put dependent, click continue. Was your dependent married at any time during the year? Let's click on no, click continue. Were they a US citizen? Click on yes, click continue. Did your dependent provide more than half of his or own support? Click no, click continue. And now we want to know what their relationship was. So let's click biological child. Let's say that they were, in this instance, we'll say that they're born in 1999. Were they a full-time student? Let's click off yes, click continue. Are you filing a joint return with the dependent's other legal parent? Let's click off yes. So we're married filing jointly. Same questions as before. Were there any temporary absences? Let's click off no, or let's click off yes. Can another person claim this child as a dependent? Let's click off no. Do they have a valid social security number? Click off yes. And here you can see you can still claim them as a dependent. So the difference there is going through the two different calculators. If they're a qualifying child and they're under the age of 17, they're a qualifying child, so you're gonna get the child tax credit. But if they're 17 up to age 23, then they're gonna be an other dependent. So that's only gonna be $500 and it's non-refundable. So only the child tax credit is refundable. Now I went through those two calculators really fast, and I'm sure your situations might be a little bit different, but the calculators will walk you through whether or not they're a dependent and whether or not they qualify for that child tax credit. And the reason I put in that dependent is because it assumes that that child is a dependent in that calculator or that walkthrough. So you really want to go through both to make sure that you're headed in the right direction. So now let's get into the strategy. So the strategy is this. If you make too much money and you need to bring that income down, then you need to look at a retirement plan. So if it's a 401k, a SEP, a simple, or an IRA, it doesn't matter, but that's not only gonna reduce your taxable income, it might qualify you for the child tax credit. So if you make over $200,000 and you're single, you can get below that threshold by saving into your 401k. So if you're maxing out your 401k and you're making a bunch more than $200,000, let's say you're making $220,000, well, that's already eliminating basically half of your credit. You can almost get all that credit back almost by maxing out your 401k. Now, if you're on the threshold, say you're making $205,000, well, then you can put that money into an IRA and reduce your taxable income in the same way. So you want to look at a retirement plan to reduce your tax liability. Now, not only does that get you on track for retirement, reduce your tax liability, save on taxes, get you the credit for the child tax credit. If your income is even lower on the lower end, you might actually qualify for the saver's credit. Your income has to be significantly lower to get the saver's credit, but it's one more credit that you can qualify for. And if you are on the lower side of income levels and you put in a ton of money into your retirement plans, then you might actually have zero tax liability at the end of the day and get the refund. So you really want to look at your overall tax liability to help with saving for your future, reducing your tax liability, getting the credit for the child tax credit, and possibly throwing in a saver's credit in there. So you want to look at everything. You don't want to just assume that you don't qualify for one of these credits. You really want to look at your entire situation to see if you qualify for these credits. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.